Hello and welcome to another update video about FETCH.AI. FETCH.AI shows further weakness and we've had the breakout to the downside of the triangle. In the last update we talked about this kind of triangle pattern. It's not a proper Elliott wave triangle, even though you could count it that way. But it just looks, well, we had corrective price action to the upside, to the downside, upside, downside. I mean, it could be an Elliott wave triangle, but I can easily also call it a WXY structure, where we had an A wave low on the 17th of June, a B wave top, and we're now in a C wave down. I wouldn't get too worried or stressed about the micro patterns here. The support area is clear, and so far the market hasn't given us any confirmation that this fourth wave has bottomed. So we were still considering lower prices, but possibly only after a larger B wave. But this might have been all of wave B, and we're already heading down in wave C. Now, I mentioned in previous videos that first of all, important to understand that this chart has shown a lot of weakness, given that the third wave, which topped here in March, only reached the 1.236 extension, so it was too weak. It was too weak for a third wave, really. It's a valid third wave, but it's just not a viable, clear third wave. I mentioned it many times before that we need to get very cautious really, not necessarily bearish, but cautious about this chart, given that it was so weak in the third wave. Therefore, we shouldn't be surprised about further downside. We shouldn't even be surprised if the price breaks support, but we are not even close to a break of support at 52 cents. But I've seen many examples in the past where the price of a third wave only reached the 1.236 extension, and in return then support broke because it was too weak. Ideally, we wanted to see the third wave get to the next fib level around $4.80. I never managed to do that. So that means be on the side of caution, not necessarily bearish, but the trend is down still since the March high from the March top, local downtrend. Now with a breakout to the downside of the triangle, we're now hovering above support at $1.08. That's the 38.2 retracement that the price is still holding. Any break below it would make it quite likely, I think, that we're heading to the 75-cent level. This is an area where we had previous resistance. That was here in December last year. As also the next fib level, and ideally the price holds there to give that bullish scenario a chance, because even in a diagonal pattern, which FETCH.AI is likely forming, I mean, from a bullish point of view, ideally this is a diagonal pattern. Even here, a fourth wave would ideally not break below the golden ratio, not below the 50% fib level, okay? If it does, okay, we have in a diagonal, we have to accept the price could go a little lower, could get to the golden ratio level, the 61.8 retracement, but below that level, there is nothing bullish left really, okay? So short-term trend is still down. Pay attention to microstructures that could take the price to 75 cents. From there, I think a next reversal attempt could be made. But really, to confirm we're heading down there, we need a more convincing break of the current support area here around $1.07, $1.08. If we now break above the last high, it could indicate that the market tries another attempt at a larger B wave, but that requires some proving. So I would like to see a break above $1.34, $1.35 for, to get an understanding that the market is motivated to at least form a larger B wave. Okay, and then we just need to look at the structure, but this is not a clear bottoming structure, especially not with a three-wave rally. I mean, a larger corrective rally can always form, but as a start of a new rally to new all-time highs, difficult from here. So that's the update about FETCH.AI. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.